FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today's 1/27/20. We're already almost done with January. You know, I was in Vancouver last week at the Vancouver Resource Investment Conference. Try to make it a point to go there every year, even though in past years, I think I would have rather have gone to the North American Undertakers Association. It would have been more lively and upbeat because people are always dying, but precious metals have been dying on the vine over the past 8-9 years. But all that appears to be in the past right now. And we're going to get an expert opinion, far more expert than myself. I'm talking about Rick Rule. You know Rick real well. He's been on the show many, many times. You find, Rick Rule of Sprott. They're kind of synonymous. And Rick, hey, and by the way, if you got a question for Rick or myself, email us. And Rick, it's great to have you back on. So this show was different than a lot of the other shows previously, wasn't it?
It was, Kerry. By the way, let's begin by saying thanks for having me back on your network. I enjoy these interviews. Yes, in fact, the Vancouver Resource Investment Conference was better attended, and I would say had better energy, certainly, than years past. And the related conference, the Roundup Conference, which is the technical conference, was also extraordinarily well attended. And I would say the mood there benefited, too, from the renewed liquidity in the system.
Yeah, and liquidity is what it's all about. I mean, I saw deals getting made. I talked to countless attendees, at the booths, companies, and they all had things going on, whereas I can remember a conference a couple of years ago in San Francisco, and at the time, Bitcoin was the dominant factor in markets by far, and they're all kind of sitting around wondering, why aren't we mining Bitcoin instead of gold or silver? It was really a despondent vibe running through that conference.
I, personally always prefer the despondent vibe, because I make my living sort of as an equity or debt pawnbroker. It has been my experience over 40 years in the market that bear markets are always the authors of bull markets. Now, I will admit that in terms of taking advantage of that despondency, I was far too early. But the truth is, if you're going to buy low and sell high, the only opportunity that you have to buy low is during periods of despondency. The fact that unusually, I would say for the first time in my career, I had 8 years to take advantage of despondency does mean that I suffered occasionally from an abundance of opportunity.
Yeah, well, it's the Warren Buffett thing. Don't invest unless there's blood in the streets. Here, I think most of the players had all their blood almost completely leaded in the street. And, you were kind of just walking over corpses, to belabor the analogy. But like everything else, I mean, I remember when sugar was trading at a penny, and people told me, sugar, you got to be in sugar. And of course, I went in and out, and I never waited around till it went up to 12 cents. But It's like any other market, right? Every dog has its day. Not to say that our sector here is a dog by any stretch, but it's been perceived as such by the broader market.
Kerry, I've been speaking really since October of last year to a chart, the Barron's Gold Mining Index. That is, I use the Barron's Index simply because it's the largest running gold mining equity index that I can find. And when you look at that chart, and as you know, I'm no technical analyst, but if you look at that chart, a couple things are readily apparent that I think are germane to our talk today. The first is that at today's levels, gold equities levels, although they have recovered somewhat, if you look at them in the context of a 40-year history, you will see that we are either approaching the bottom, at the bottom, or just off the bottom but we are still, from a historical context, extremely cheap. The other thing that you will see is that the median gain experienced in the last 9 recoveries from oversold bottoms has been spectacular. The recoveries have varied, not for individual stocks, but rather for the index, from, if my memory serves me well, a low of 180% bottom to top recovery to a high of 1,200% top to bottom recovery.
Right.
And in terms of periodicity, the declines that we have seen from 2011 to today are the longest declines, unbroken declines on record. So not that history always repeats itself, but what that chart teaches us about probabilities is that we are at or near the bottom, that we are already into the longest decline, possibly coming out of the longest decline on record, and that the recovery that we might be able to expect to occur from a historical point of view would be on the low side 180%, on the high side 1,200%. That sort of tells you that while no one should put all their eggs in one basket, somebody who ignores completely both gold and the gold equities is doing themselves a really pretty dramatic disservice at this point in time.
Yeah, I agree. And in fact, I pulled up that chart now that you mentioned it. It starts in 1971, or at least that's as far back as I can go. And really, the index is not much above where it was in 71, especially on an inflation-adjusted basis, if there is such a thing. And it's interesting that it started in 1971 because that was such a significant year. And I'm looking at the sawtooth on the chart and see exactly what you mean there. And, you know, it's interesting, this long decline here in the mining shares prices, the gold stock prices, mirrors the ascent of the broader market, the Dow and any other index you want to point your finger at, because that's been going on for 10 years now. So I wonder if there's some coincidence there, some causation or correspondence there on this curve.
That's more for somebody with a macroeconomic background like yourself to talk about. I'm a lowly loan shark, a credit analyst.
I never looked at you as a loan shark, Rick. I always kind of more looked at you as a payday lender.
Okay, I'll take either.
Hey, but
I'll take either. Solely to disclaim, I understand the parallel that you're trying to make. I'm just aware that I'm not the right person to comment on it.
Yeah, I'm just teasing. You know, like, hey, without you, how many less companies would be around right now? I mean, there would be a gaping hole in the sector. It would be a lot worse if you weren't doing your job.
Well, it's kind of you to say.
Well, true. So we're moving on now. The big action in the metals, yeah, you know, gold's up, you know, $1,570 an ounce. Silver's back over 18. But man, look at palladium. Look at the run that platinum has had recently. Platinum's still well below where it should be in all likelihood, but it's over 1,000. And look at rhodium. Like, most people can't even spell rhodium, Rick. Rhodium's bid $9,000 an ounce, and this is in the past few months. Can we learn something about, or can we infer something about where gold and silver should be heading from those other metals? Palladium, $2,300 an ounce. A year and a half ago, it was $700.
I don't think that the markets for the so-called noble metals and the precious metals are as connected as gold bugs wish they were. There is an instructive lesson that applies to precious metals, which is simply that long bear markets are the authors of bull markets. And certainly in the so-called noble metals, we've had a truly spectacular bear market, which made them cheap enough to encourage demand while at the same time constricting supply, which is what bear markets are supposed to do. And in that sense, I suspect that precious metals will benefit in the same fashion. But it's important to note that the noble metals are used for things. They are as much industrial materials as they are precious metals. And this is, I think, the author of the bull market, in particular because of two factors. One, platinum, palladium, and rhodium are supply constrained. They're produced in quantity in three countries: Russia, which is opaque and out of favor, South Africa, which is a disaster, and Zimbabwe, which makes South Africa look like a great place to do business. So there are supply concerns. On the demand side, what's unique about platinum and palladium is their utility in fabrication processes. They're primarily, in the case of platinum and palladium, autocatalysts. And what gives them so much demand elasticity to the upside is simply that it takes a small amount of platinum or palladium to fulfill the autocatalyst function that allows you to sell a very, very, very valuable car. Specifically, even at today's palladium prices, it takes about $200 worth of palladium in an autocatalyst to sell a $30,000 or $40,000 car. Were the price of palladium to double from here, it wouldn't change materially the sticker price of the car, which is to say that for a while, when palladium was selling for less than the cost of production, either auto sales would go away or the price would go up. You know, you don't see a bunch of young kids with long hair and raggedy pants holding protest signs that say, "We want more smog. We want more smog." So, you know, we had probably a unique circumstance. The other circumstance that we had in palladium is also instructive. For many years, palladium sold at a substantial discount to platinum. And what that meant was that fabrication technologies were, sort of put in place, discovered over 10 years to favor palladium over platinum. And as those technologies got better and better, the use of palladium as an autocatalyst for gasoline engines began to develop more and more. So demand for palladium occurred more and more. At the same time that platinum, which is more useful in diesel engines, became reliant on the diesel market. And the Volkswagen diesel scandal, of course, reduced demand for diesel engines and increased demand for gasoline engines. So ironically, the positions of palladium and platinum in the market reversed. Now we have a circumstance where platinum is substantially undervalued relative to palladium, and work is going on around the world in laboratories to begin to develop processes and techniques to substitute platinum for palladium. The point of all this is simply that investors need to remember that ultimately markets work. They're extremely messy, but bear markets are always the authors of bull markets, and bull markets are always the authors of bear markets. And I think that lesson is valuable for gold investors and probably more specifically for silver investors.
Yeah, silver has been in a world of woe for nearly a decade. And I like what you said as far as, bear markets creating bull markets and vice versa. That's the truth. And really, there is no better way than the markets for determining these values, because when governments get in the way, then you have shortages or surpluses, and you have a whole bunch of things, unintended consequences occurring from the intervention. So, hey, one thing, talk about copper. The future is electric vehicles. I mean, this is just a fact. I have to admit I was late accepting it, but everything is going to be electric. It doesn't matter whether you think it's great, whether you think Tesla should be 10,000 or whether you think Tesla should be liquidated. All of that's irrelevant. We're heading towards electric. That means copper, and opportunities in copper shares in companies are primarily copper. Everything else comes with it: gold, silver, whatever, base metals. But what's your take on the copper market and on the companies out there who are looking to develop like huge copper projects?
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
I'm a long-term bull on copper. Partially because of electric vehicles, although I think the market adoption of electric vehicles will be slower than many people, probably yourself, believe. What I do believe is that the big trend in copper will be simply the fact that 1.6 or 1.7 billion people worldwide aren't yet connected to the grid. The advancement of the bottom 2 billion people on Earth, by the bottom I mean the poorest 2 billion people on Earth, and the continued trend to urbanization in frontier and emerging markets is a story that absolutely propels copper. With regards to vehicles, in addition to the emergence of electric vehicles, the amount of copper used in conventional internal combustion engines increases every year. So if you give me 10 years or 15 years, I see extraordinarily buoyant markets for copper. In the nearer time, in the 2 or 3 year time frame, I'm a little torn. At today's copper price, we don't have the incentive, the price incentive, the economic incentive that we need as an industry to build $4 or $5 billion large-scale copper mines. The price needs to be $350 to $375 per pound US in order to incent these large copper porphyries. So that's extremely bullish. Either the price has to go up or over time we run out of copper. The problem for me with the copper thesis is that we are at least 10 years into an economic recovery, however tepid. And my nervousness is, although I'm not an economist, when I look back over my lifetime, 45 years in financial markets, 10 years is an economic recovery that is extremely long of tooth. And my own suspicion is that this economic recovery is driven partly by artificially low interest rates. Were the central banks, were the political class to lose control of interest rates, and I'm not saying this is going to happen, but if it occurred, if you saw sovereign debt yields and commercial interest rates, the prime rate up by 250 basis points, there's a probability, I think, that you would see a very sharp economic contraction that could, in the intermediate term, negatively affect copper demand. So while I'm extremely bullish about copper in the long term, I'm neutral to bearish in the short term.
And half the copper that's being consumed in the world now is being consumed by China, so it's susceptible to the vicissitudes of the Chinese economy, of course. So,
correct.
And because these tier one projects are so capital intensive, any substantial increase in interest rates is really going to affect their viability and their economic feasibility as well. But on the other hand, like you said, there's 2 billion people who all want to walk in at night, turn on the electric, have the air conditioning running, all these things. So there's countervailing forces. So I guess in the long run, definitely in the short run, there's going to be economic dislocations and disruptions, no doubt that's going to have an effect. So, and as far as cars go, yeah, like they're selling 80 million cars a year. Only 2 million of them are electric, and we have 1.4 billion vehicles out there. It's going to be a long, long transition period out there, because even if they upped it to 160 million vehicles a year, which would be pretty outrageous impossible feat, we'd still have a 10-year transition period from ICE to EV. So, but the trend is there. The governments want it. It's going to happen. So copper, though, interesting because it's plentiful, it's recyclable, and yet we just keep consuming more and more of it.
Correct. I mean, in the longer term, the continuation of a trend that we've seen for 30 or 35 years, which is the ascent of man, and the rapid improvement in the economic circumstance of the poorest 2 billion people on Earth. By the way, I'm not suggesting that they're in any immediate danger of being not poor, but just less poor.
Yes.
Will take care of the copper market all by itself. A lot of the recovery that we've seen in the copper market over the last 20 years, 25 years, stems back simply to Deng Xiaoping saying in China to be rich is glorious. And the incredible economic boost that making people in China a little more free has caused to occur. And I'm seeing that occur around the world, albeit in fits and starts.
Yeah, it's very true. Assuming the governments will get out of the way and allow the magic of the free market to occur, which, you're asking government, you're asking a cat to be a dog. It just doesn't work that way. But we can only hope. On occasion, they do become enlightened, and then they allow it to happen, like Deng Xiaoping. So, one other thing I wanted to touch with you, Rick, and then we'll let you get on with your day. Cryptocurrencies. They've definitely, for the past 2 years, December of 2017, so getting on 2.5 years now, have been out of favor. That's when Bitcoin peaked. Prospects, and not necessarily for Bitcoin, I don't care what you call the coin. What do you think its future is?
Well, I hope its future is bright. Cryptocurrencies are ultimately currencies. I'm a consumer of currencies. In my wallet right now, I have US dollars, Canadian dollars, euros, and pound sterling, and I operate in all of them. The idea that there are many disparate groups, some of them governments, some of them private, competing to offer me new currencies with new utilities, to me as a consumer of currencies, is a great thing. With specific regard to the more popular cryptos, including, of course, Bitcoin, I'm a bit torn. In terms of their emergence as a medium of exchange, their very volatility, their attractiveness to speculators has reduced their primary utility. As I saw it, they had two utilities. One was anonymity, and it seems as though the promoters of cryptocurrencies, or at least some of the promoters of cryptocurrencies, want them to be more mainstream and more, in fact, regulated, so-called legitimate. If that happens, of course, you remove the advantage of anonymity. The second circumstance is simply their volatility. Bitcoin, of course, famously advanced from sub $1 to what, $19,000 or something?
Yeah, give or take.
Declined to 5,000, now back up to 7,500. That incredible volatility, while it's attractive to speculators, makes it an extremely inefficient medium of exchange. Because unless somebody's life is denominated in Bitcoin as a medium of exchange, when you use it to buy a cup of coffee, you don't really know what you paid for the cup of coffee, nor does the merchant know what he or she received for that cup of coffee. So my nervousness in the interim is that the two primary utilities of non-tied cryptos, which to me were anonymity and frictionless or low-cost conveyance, have been obviated. Yeah. The technology, the distributed ledger technology, and the blockchain technology is and will continue to really disrupt, I think in a wholly positive way, the whole financial services industry. As an example, Sprott has been extremely active in adapting the distributed technology to gold. And we believe that the distributed ledger technology by reducing the friction, reducing the exchange costs, will return gold to being a viable form of money. We also think that we can reduce the cost of gold ownership for people. And this is occurring in other places. There have now been 3 or 4 circumstances where large institutional grade real estate projects have been denominated in effect as coin and have been subdivided figuratively in crypto markets. We think increasingly that insurance can be securitized on the distributed ledger. That is, insurance liability can be encrypted. And we know for certain that certain forms of debt have been and can continue to be fractionalized using the distributed ledger technology, and had the markets associated with them become much more efficient. The dream, of course, would be to have all that occur in a circumstance where free individuals were able to trade in those assets, fractionalized assets, unencumbered by outfits like the Securities and Exchange Commission.
Mm-hmm. Yeah, it's really interesting the way that it's evolved, and it's evolved so quickly. I think the anonymity is probably a thing of the past because they've kind of been told if you want to make this thing work, then it's got to be trackable so the government can extract its pound of flesh, right? So I think that part, well, there might be apps that maybe anonymize it. That's kind of not going to happen anymore. And what you were saying is really interesting. The volatility is its biggest enemy and yet its biggest asset, because you'd have to be insane to go buy something, a car for 3 or 4 or 10 Bitcoins, and then you get home, no sooner did you park the car in the garage and the price of Bitcoin went up 50%, which means you overpaid for your car by 50%, or maybe you got lucky and it went down 50%, and then you got a real steal. You could go buy back those Bitcoins for half the price. But that doesn't make for sound business judgment, and it makes it completely unviable as a medium of exchange. So until it flattens out, at least with the dollars, they're losing money. All those currencies in your wallet, they're losing value by the minute, but they're not losing that much value that you have to just immediately get rid of them. So there's a security that comes from the conventional currencies that you just can't achieve with cryptos at this point. But technology, do you think there's a crypto ahead that's like a super crypto that can't be broken, you can't steal the wallets, and that will be so attractive to the masses of humanity that they just give up government currencies and flee to it?
I don't. I believe that technology will make cryptos better and better. I believe now that technologies are sufficient to design products with high utility faster than those products can be accepted by humanity, simply because the technologists know what's possible much quicker than people do. I remember famously Steve Jobs saying it isn't the customer's job to know what they want because they don't know what's possible. My hope is that rather than having a super crypto, we have 300 cryptos, and that those cryptos evolve to offer specific utility to specific consuming groups, and that the wallet and exchange technologies develop fast enough that a consumer could avail himself or herself of 5 or 6 crypto technologies, the same way that I currently have in my pocket 4 forms of fiat currency.
Yeah, I was disappointed on the one hand, but probably thought it was a good thing on the other. When Facebook announced Libra and that they had really gotten all these large companies around the world into it. And, I thought that was going to be a major breakthrough, because then Facebook could pay their vendors in Libra and they could accept payment in Libra, and money management needs and issues for the company would totally be streamlined and much more efficient. And yet the governments, various actors in our Congress came out against it, and people who didn't even know what a cryptocurrency was were crying about it. And yet, maybe it's going to go ahead. I don't know. I thought that was really going to be the missing link, because it was a tracking currency. It was going to track a basket of currencies, and it really looked like it was a major step forward.
Well, if you want to be speculative, a major crypto coming from a technology powerhouse would not have to be American. Why couldn't, Alibaba or somebody like that cause it to occur? I'm not saying that's going to occur, but just for fun, if the Chinese government decided that they wanted to mount a substantial challenge to the hegemony of the United States and the US dollar, fighting a rearguard action that would cause what they would hope to be the dominant cryptocurrency in the world to be a function of Chinese technology and reliant on a Chinese platform might be an interesting idea. Understand, I'm talking way above my pay grade.
I know what you're saying, though.
I'm a resource guy and a loan shark, but it's an interesting idea. The technology and the platform not have to be American.
Absolutely. Yeah. There's no chauvinism here. There's no, there's no bias, because the technology is out there. And that's the key. There's no allegiance to any particular country as far as the technology goes. Anyway, Rick, really appreciate you taking time out to talk with us. The link will be up to the Sprott website when this gets posted. And any questions or comments for Rick or myself, we'd love to hear from you. Where do you think these cryptos are going? Where are precious metals headed? Just tell us your opinion. The email address is kl@kerrylutz.com. I'll share it with Rick. Rick, always a pleasure. Thanks so much for coming on.
My pleasure, sir. Thanks for the conversation. It was fun.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.